hit OK. And there we go.
Yeah.
Can you see everything?
Yes.
So we have the S&P E-mini, we have the ES, the YM, and the NQ. Basically, what I'm looking at here is the differences between them, because hypothetically, they should all run in parallel. They should all do the same movements for the most part, but they don't always do that. And the reason is because that tends to mean that it's going to trend in some way. Obviously, for the last 2 weeks or so, we've just been going straight up. But if you look out here, I've marked out some confluences. There's a divergence between, the ES and the YM were in agreement, but the NQ was going to make a higher high here on March 22nd. So that was indicative of the trend going higher in this case. The NQ led the way, essentially. The next step is looking at the Dixie versus the dollar. Or I'm sorry, the ES versus the Dixie, which is the dollar index. So basically, we had some areas of some points of interest. Essentially, this is a inefficiency on the 1 hour chart. This gap right here is to be considered throughout the week and how price has played off of it. So we had a big, so this is why I thought we were going to end up going down, is because we had these big impulsive candles downwards towards it. But then I should have known, Sunday morning or Monday playing around in here and not really energetically going one way or another. It probably wasn't going to go down. Aside from that, we look at the comparison between these two. These are inversely correlated. So they were supposed to run if in perpendicular, like they're not supposed to run in the same direction, essentially. And so far, it was doing that. So for a while, on Wednesday, for example, ES was going up and Dixie was going down. This is how this market normally correlates. But then it started consolidating and going back up, and the ES is going up. However, the Dixie is not like energetically going up. It's more like kind of chopping around, slightly going up, not taking this high yet. Whereas the ES has taken all of its highs in the last 3 weeks, 2.5, 3 weeks, something like that. So that's telling me that there's just these being in sync is, for me personally, is just kind of a non-confluence, I guess, in this case. It's good to consider. It's good to continue to look at it, but it's hard for me to pinpoint what's useful about this at the moment, other than I imagine the trend is going to change shortly, especially since we took out this high today. Looking at just today, this is the 5-minute chart. And you guys wanted to know something about entries, or how best to get in to an entry, essentially. In my opinion, this is how I do it, or this is how ICT teaches us to do it. You look for the fair value gaps here. You determine the bias, determine the trend, which has been up, and you paint these inefficiencies on your chart. The inefficiency, called a fair value gap, is defined by three candles. Candle one is the high in this case. Since we're going up, candle one's high is the bottom of the fair value gap. Candle two's body, its definition, its role is to make a gap between candle one and candle three. Candle one's high and candle three is low in this case. Candle three's low defines the top end of this fair value gap. Additionally, within this fair value gap, there's a significant 50% mark that should be denoted. Reason for this being is that this is one of the options for the algorithm to push price to before going back up into the other direction. So essentially, if we could determine, which it would have been hard to determine this because it's not a very large fair value gap, if the trend was very, very strong, in other words, if we know we're just going to keep going up, we can put an entry, we could be aggressive with it and try to put it at the top of this candle of the 930 candle in this case. That's not really according to the rules though. Were you supposed to put it as at the top of the fair value gap, but as this one was forming, it would have been a missed entry essentially with that because price never came back down into it. Normally the roles of these gaps is for price to revisit it and to fill it back in. This is an unfilled fair value gap for the day, which is not, it's somewhat significant for sure. It'll probably be paid. It'll probably be revisited too, probably at the very middle at some point in the future. But these are the type of inefficiencies I look for an entry. And essentially the goal is to place an order at the top of the fair value gap. So if that's my buy order, I would place my buy order at the top of this fair value gap. If I could deduce that this was going to be a very strong trend, it's just going to expand upwards very strongly, that's where I would have put my entry. My stop loss is located one tick below the low of this candle. Generally, it's supposed to be candle one, but in this case, this is the recent low. If this is 40.88 and a half, I put at 40.88 and a quarter. So essentially that's what my entry would look like for this scenario. You want to wait for price to come back. If you're long, you want to wait for price to come back on you a little bit. You want to let it come back a little bit so you can get in. And you can have a reasonable stop loss. This to me is a very extensive stop loss. It's not a trade I would have wanted to take, but it's an example of one you could take with these rules. The next one is just above it. So when we have overlapping wicks and tails like this, you just pick the 50% mark between the two of them. So if you draw a box between that body's low and that body's high, and you pick the 50% line of it, make this green, so it's actually, that's kind of hard to say so, but whatever. That's better. So the inefficiency lies between the wick and the tail, or the tail and the wick here. And it's the same concept. You're looking for the 50% mark between in the inefficiency. This is where price would have tagged you in perfectly. Stop loss would have been below this low here. So that's how you would get in. If you're confident it's going to continue going up, look for something like this where the either the wicks overlap or the wicks don't overlap, but there is a gap between. You also need the candle in the middle to be energetic. You really can't enter like, don't try to make it happen with like this candle. You actually could have done it with this one here, but your stop loss would have been all the way down here. You want to wait for it to put in a new low before you try to enter. These candles, that's 8:30. And to be honest, this is 9:30, so you wouldn't even want to trade that necessarily because it's the open. That is one way you could have played it though. Put in the low here, couldn't take that out here. Your confidence going to shoot off. Enter down here if you're ballsy. If you're gambling a little bit.
What's the good entry point here? The 9:45 or something?
9:35 candle.
Which one is good entry? 9:45 candle or 9:35?
The 9:35 low is where I would have wanted this entry right here.
Okay. After the candle.
That's, like I said, that's kind of risky. If you're confident it's going to keep going up, then be risky. But that's a trade maybe I wouldn't have taken because it's the 9:30 open.
Yeah.
But that is an example of the type of inefficiency we are looking for, though, where you have this type of gap. And the same thing exists here, except these wicks overlap the energetic candle in the middle. And the idea the idea is to find a stop loss placement that you're comfortable with.
Yeah.
This is a stop loss I would be comfortable with. This was a 5 or 6 point stop loss. And obviously it delivered. So right here at doesn't look like we made any significant gap before or like during the lunch hour, just chopped around. This is why I don't trade during the lunch, 12 o'clock to 1:30 or 1, it wasn't very, very nice. We have an example of this gap here. And again, unfortunately, price did not revisit it today. So this would have been probably a swing and a miss. But your entry is right there.
Yeah.
And again, your stop loss would have been all the way down here. So this would have been considered like not a nice entry for me. You could try to put it down below here.
Stop loss.
Right here, like below this 11:05 candle. That's technically a low, but it's not, I wouldn't trust it. Because the thing about today and the thing about this week is that we've gone so far up into premium price for where we have been. And you just expect this to turn around at any moment, but it just keeps going.
Yes, it is. It is.
So in my eyes, that just means it's a risk off situation. It's where your risk is maybe halved. That's how I believe I would deal with this situation. If we're trading, even though we're technically trading in the trend, so you would think it should be a risk on, you should have your full risk going, but it's just something I don't trust right now, especially given the social and economic climate in the US right now. That is a different discussion altogether. Got another fair value gap here. This one turned out very nicely. Your entry is up here. Maybe even at the 50% mark, but we've been going up all day, so just one direction. So the idea is that if you're going long, you don't want to enter on a blue candle or on a green candle. You want to enter when price is going down as much as far as price can go down, and you think it's still long. You want to enter as far as it can go down so you can minimize your risk. I know this is probably basic stuff to some of you. I don't know if anybody else is in here other than who we normally have, but yeah. You don't want to enter like up here, don't enter on these candles, enter on these candles that are right here. $3:00, pretty late in the day, but that's a nice candle. And you can see this candle, this wick or this tail right here delivered directly to the same low. Yeah, it's the exact same low. So it's kind of hard to get into, but that's your entry.
My long entry will be when it cross over that black candle, the previous black candle.
Your long entry when it would do this.
No, the previous black candle. Yeah,
this one.
No. The next one, right side. No, the one you sold before.
What time?
Go further right. Go next. Yeah. After this, if it goes above that black candle.
Above this black candle would be your entry?
Yeah, above that black candle close. Okay. Not yet. Not
that makes sense. That's essentially, so for this area.
Now I'll enter, if it closes above that, see that black candle, solid black candle.
This one right here.
That one, on the top of that one. It reverses and goes above that.
The 335?
Yes, 335. Your entry is 4126, but what is the top of that one? 4132 or something? No.
330.
No, the opening one. Opening, how much you open?
The open is 4132.25.
Yeah, somewhere. Yeah, have to stop right there. Buy stop there. So
you stopped out right here.
Yeah, buy stop and go above.
Oh, okay, gotcha. I see what you mean. Why is that? Like, what is your system with that? Does that have to do with the moving averages or?
Yeah, it's one of the moving averages, but if you shrink the chart little bit, okay, smaller. If you see it's a bull run, right? So if you see
Right.
that, that's a Fibonacci retracement. Okay.
And you have your stop loss down here.
Stop loss will be below to that black candle again. Okay.
Yeah.
Not that black candle, the other black candle. I will not go more. Yeah.
This one. Okay.
Yeah.
Tight stop loss.
Yes.
And you'd have it entry up here.
Yes, exactly.
Okay. Okay. So you wait one black candle for the when you're going up, you wait till it pulls back a little bit. You enter very like aggressive. And then you have your stop loss.
Basically, yeah, it's a retracement. If you see, if you draw a Fibonacci retracement or it's a Fibonacci extension, okay. So it is retraced nicely. I'm thinking it is 50% retracement. Okay. So
you do 10-point stop loss just across the board.
it might be at 10 points or 8 points, something like that. Okay. Not
Okay. So you're like right here.
Yeah, you get your reward there.
Is that just a flat stop loss that you keep? Because it's just generally with this market, that's about it, the ATR or so.
Yeah, no, I don't follow ATR stop loss, but I generally follow either 8 points or 10 points.
Okay. Yeah, I mean, same. I would have had an entry here. I just would have done it on probably either right here or right here. Hindsight obviously makes me want it right here, but who knows what I would be thinking in the moment. Maybe I would even call it off because we gap down here, and that's kind of a volume imbalance like that isn't fun.
No, basically, see, if you see the blue candle after black candle, there is a solid blue candle, right? Yeah. So that closes, right? Once that closes, you take the entry. Okay. So because that gives you the strength. It's a how many points move.
But I'm also looking at. I'm seeing this too. Like according to the rules I'm laying out, this is the candle that I want to enter on in this time frame.
Yeah. If somebody forgets missed that entry, then there is another entry there toward the closing.
Absolutely.
Yes.
Absolutely. Yeah, I would just maybe if I miss this one, like if we're already on to this blue candle, if this blue candle, maybe I put it like here for the 50%. Would have still missed. Or where I have it here.
Actually, we entered, if you see, we entered 4127 and out at 4125 and 4130, somewhere around 12:15 or something like that, right?
What time?
3:10, 3 o'clock, 3:15, around that time.
Around here.
Yeah, yes.
Okay, yeah. No, that's great entry.
You remember I posted that 4125 entry?
Yeah, I can't pay very close attention to it today because my boss doesn't like it on my phone anymore. But
no, actually, that entry was, you see that blue candle left side? Yeah, that's the one. After that close, okay. That was the entry. You turn it to 15 minutes, then you can see the real picture.
The fact that this candle is such a big impulsive move up, and it takes out these equal highs here, these relatively equal highs, is a big sign that it's going to continue with strength.
Yeah, that's a conviction, right? So a lot of buyers came in. So
this is the 5-minute chart.
Yeah.
And then I have the 1 hour chart on the side just to remind myself where we're at. I don't really like that. But another confluence that I like to use is the new week opening gap. So you can see how price kind of like did its thing off of this one here. For me, seeing this run above this high here, this is a big confluence for me since it made very energetic candles. Came back down, started heading back up. It bounced. It could not close below this level. And again, this level, if you don't remember from the last one, or if you weren't here, was the midpoint of the gap that's created at the end of the day, Friday, and the beginning of the session, Sunday evening. So in this case, this goes all the way back to March 3rd. Or March 5th, sorry about that. This gap right here, the top of it being the end of the day Friday, bottom of it being the start of the day Sunday. Or I think this is technically considered a Monday. I'm not sure. Part of Monday, I don't know.
But
But
if you
that's
go
the-
large time frame, then you'll figure it out what was the before. So
What's that?
if you go large time frame, like 1 hour or something, you will not know what was the previous close or previous down or previous support.
It's for I'm sorry, I don't understand.
No, I said that if you go the time frame 1 hour or 60 minutes,
Yeah.
then you'll know actually more clarity.
It's easier to see on the lower time frame, but I see what you
Mhm.
mean. You can look at the open high-low close for these two candles, and just makes it easier.
Yes. Mhm.
But I just wanted to see the visual gap between
Okay.
them.
Mhm.
But yeah, so really price tends to play off of these a little bit. And they're just confluence for me. Like this couldn't get above this one. It wicked above it, and then it went down low with a huge black candle on that. I guess this is on the hourly chart, but that's pretty energetic. And you would think going into Friday last week that we might be going lower, and then we kind of just do this like struggle move through it. But let's get back on the lower time frame so I can get back to what I was trying to explain. For at least today, you have some confluence here with the open. So these energetic candles going above this level, this midpoint from a few weeks ago. And I know this sounds kind of weird, and not a lot of the people talk about it like this. So for levels from weeks ago, it doesn't seem like it'd be relevant, but to me, this has been proven to be useful. When you go through it with that much energy, and then you also take out a recent high, make a higher low, kind of, I don't have an entry yet, but I'm pretty sure we're long. Energetic downwards candle makes me nervous, but it can't close below the low. It cannot get below the low, so it's still bullish confluence. This actually does make a gap for me. Does not give me an entry. I already did all the gaps and stuff, but that's what I was saying. When price passes or interacts with these levels, it's good confluence to know, for me at least, which direction it's going.
Yes, for sure.
Yep. Get on the 1 hour. Let's see here. I can't remember if this was a gap or if this is a volume imbalance on the daily chart. I posted this in the chat either today or yesterday. I think it was today. So these are these are levels that would have been pertinent for the daily analysis. This would have been marked out on my chart as just something to keep my eye on throughout the day, possibly throughout the week as it happened last month. Seeing Bryce get over this high.
Yes, it's on a right now roller coaster kind of stuff.
Mhm.
Going to reach more, another 50 to 100 points.
Yeah, you think so?
Yeah. So my target is for in the SPX 4,200. Today it closed at 4109. So another, you can say 90 to 95 points.
Yeah.
Mhm.
Yeah.
That's the previous high that it has. So if you see, that's the February 2nd high. So
Yeah, up here,
yeah,
42 or
that is February 2nd, 0202. So go to 0202. High. 0202.
there we are.
Yeah, that's the one it will target.
42, 44.
Yes, in the ES it is 4244, but SPX it is 4200.
Okay. Oh yeah, because you use SPX as your confluence.
Yeah, if I if I use SPX to trade ES, I think I will make more money. So
Yeah, it's crazy because you would think that they would react at the same time,
exactly, it
but
does
they don't.
exactly the same thing. So
Yeah.
I sometimes take the 1 hour and 15 minutes in the SPX and then take the trades in the ES. Okay.
That makes sense.
Yeah.
I like it.
90% of the time I'm right on the SPX move. Okay.
Right, right.
Mm.
No, I agree. Does anybody have any questions so far?
What's your John, Raj, Amit? Do you guys have any question?
No questions.
Okay.
I have a indicator that draws out the fair value gaps on candles,
Yeah.
depending on time frames. I'll send that out later today when I get a chance.
That will be
Yep.
helpful, Amit. Yeah.
It's for the TD Ameritrade platform.
Is that TOS?
Yeah, TOS.
Yeah, that will be helpful.
That's what I used. I sent out a link this week, I think, or last week.
Is that
for
the
the
one,
levels
the fair value gap? I'll check that one. I didn't import it yet.
I try to plot out ATR levels
Uh-huh.
and the fibs based on that for weekly, daily, and monthly.
Uh-huh.
And then I use other indicators as a entry to if it supports, depending on how the levels react to the price, I use entry points to get in.
Yeah, we'll have a session from you, Amit. A lot of users needs to know how is to understand your entry levels. So that will be nice if you can have one session.
Yeah, I'll try. I'll let you know when I get a free time
Mhm.
so I can plan it out.
Sure. Mhm.
Yeah.
Next week, Friday, I'll try to. I'm not sure, Alex. Did you attend my moving average and MACD session? I'm not sure if you did.
Yeah, I looked at it. Or that's what I used for a really long time actually.
I'll have a live session so you can understand more better. Okay.
Yeah, no.
And
For sure. I don't like using MACD just because it fakes me out more than it works for me. Or I think maybe I would just need a lot more experience on it.
Yeah, I think you need to try it out. Actually, that is more better for your confirmation and entry points. Okay. So everything boils down like one way or the other. It's the same entry points, whatever the indicators you take. Okay.
Mhm.
So everything will boil down. If you combine RSI, MACD, and moving average, you'll find the entry point right exactly what you're looking for.
Yeah, I don't really like the moving averages for myself, but everybody else definitely is more than welcome to use whatever you want, guys. You know, if that helps you to get into trade or whatever, then that's 100% what you should use.
Let me cover you next week, attend it, and you definitely like it after that.
For sure. I used it in the beginning, and like I said, I liked it. Just
no, it needs to be proper MACD and proper moving average. And
yeah, it's and the levels were correct. Like the I followed your guide. You know what I mean? I use the same levels in the MACD and everything.
Okay.
The problem in the market is being very heavily manipulated right now too.
Yeah. Yeah,
It's
kind of.
very, there's a lot of stuff going on, and it's treacherous waters out there, guys. I think that's a good takeaway too. Is just watch your risk and make sure your stop loss is appropriate and everything like that, and try not to get emotional. It's going to move around a lot, and it's going to give you a hard entry point. In this case, the momentum was a great indicator today. There's a lot you couldn't, you probably had better or earlier confluences with the MACD on a day like today.